What is the best trading app to start investing in index funds for beginners? Which offer low fees? What other valuable tips are important for a rookie investor? When it comes to investing in index funds, especially if you're just dipping your toes into the investment waters, you want a platform that's beginner-friendly, has low fees, and offers a good variety of index funds. Remember, it's about stretching that dollar and maximizing your investment, not just for now, but for the long haul. Choosing the right trading app. There are a few trading apps that I'd recommend for rookies. First up, Vanguard is a stalwart in the world of index funds. They invented index funds, so they know a thing or two about them. They also have some of the lowest fees in the industry. Their app isn't necessarily the flashiest, but it's solid and reliable. Another great option is Fidelity. Like Vanguard, Fidelity has an excellent selection of index funds with low expense ratios. Plus, their app is user-friendly, which can be a big plus for a beginner. If you're into a more modern interface and a bit more automation, you might want to check out Betterment or Wealthfront. These are robo-advisors that can help manage your investments for you. They usually have low fees, and because they're automated, they take a lot of the guesswork out of investing. Investing tips for beginners 1. Start small. Don't feel pressured to pour in a lot of money right off the bat. Begin with what you can afford and understand comfortable financial risk before scaling up. 2. Educate yourself. Read books, listen to podcasts, and follow finance blogs. Knowledge is power, especially when it comes to your money. 3. Diversify. Don't put all your eggs in one basket. Index funds naturally diversify your holdings, but consider diversifying across different market sectors too. 4. Keep emotions in check. The market will go up and down. That is its nature. Make decisions based on logic and long-term strategies, not on the emotional roller coaster of daily market fluctuations. 5. Be patient and consistent. Investing is a marathon, not a sprint. Think about it like you're planting a tree. You water it, take care of it, and over time it grows. It's the same thing with your investments. 6. Low costs matter. Fees can eat away at your earnings without you even realizing it. Look for low expense ratios and avoid trading too frequently, which can lead to additional fees. 7. Automatic investing. Set up automatic contributions from your checking account to your investment account. This way, you'll invest consistently, and it takes the decision-making out of the process. It's investing on autopilot. 8. Roth IRA. If you're looking to save for retirement, a Roth IRA is a great choice. It allows your investments to grow tax-free, and you don't pay taxes on withdrawals in retirement. 9. Tax efficiency. Understand the tax implications of your investments. For example, index funds are more tax efficient than actively managed funds, partly due to lower turnover rates. 10. Stay informed. Keep up to date on market trends and economic news, but don't let the constant barrage of information sway you from your long-term investment goals. I'm based in Portland, and the investment community here often emphasizes a sustainable and long-term approach to investing, aligning well with the philosophy of investing in index funds. Whether it's a rainy day in Portland or a sunny one, the principles of smart investing don't change. Stay consistent, keep learning, and remember, the best time to plant a tree was 20 years ago. The second best is now. Happy investing.